Welcome back to 22 Minutes in Lending. I'm your host, Vince Passione, and today we have the pleasure of speaking with Nick Goraczkowski, president of iLending. With nearly 30 years in the financial services industry, Nick has been instrumental in iLending's growth. Under his leadership, the company has become a leader in auto refinance and lender partnerships. Nick, welcome to the podcast.
Pleasure to be here. Thanks, Vince.
This is part two of our series on auto refinance, and we had Eric Stradley, the president of Caribou, on, and he had an interesting sort of stat. He said that there's about 1.2 million auto loans that are refinanceable, but when you think about the number of people doing it, there aren't many people that are out there. He said there's like 10 million borrowers that could benefit from refinancing, but not all of them act on it. So why is that happening? Why don't eligible borrowers, or why do eligible borrowers hesitate to refinance their auto loans?
Well, the auto refinance market opportunity is massive. I mean, like you said, millions of borrowers are overpaying on their loans every single month. I think there was a recent stat by the Fed Reserve Bank in New York, over 1.6 trillion in outstanding auto debt. So you add that to the volume of auto loans is just astronomical. I think the main reason that a lot of borrowers don't pursue this is everyone has heard of refinancing their mortgage. People know they can refinance their mortgage. Not a lot of folks know they can refinance their auto. It's a lot easier process, and obviously they can save just as much money. So people get a little intimidated when they start thinking of something they've never done before, right? They've never heard about auto refinancing. They have all heard what the nightmares on the mortgage refinance can be. So a lot of folks don't go down that path, which is where we come in. A lot of our marketing, we come find the borrowers that are interested in refinancing, but a lot of our marketing is directed at consumers that don't even know it's a possibility.
Yeah, so you think it's we've talked about this. So you think it's mostly it's awareness, huh? That consumers really aren't aware that this is something that they can do.
Absolutely. And it's a growing industry, right? You're starting to see it more and more and more. With all the changes in the market coming in 2025, we definitely think that it's going to be a large increase in the market this year. There's getting to be more awareness on TV and all the fintechs out there bringing the idea of auto finance forward.
Right.
But historically, just a lot of borrowers, a stat from a few years ago from experience that there was almost 60% of folks that didn't realize it was an option.
Yeah, it's interesting stat. It's almost consistent when back in 2011, Lenke launched our education refinance business. We had a very similar stat out there that we thought it was over like 60 to 70% of the population did not realize they could actually refinance their education loans. So um, interesting similarities. Now you touched on a stat, it's an interesting one, right? Outstanding auto loan balance is about $1.7 trillion. The other stat, though, is that average new car loan, the APR is about over 7%, and used is over 11. So are you seeing an increase in consumers seeking refinance for just rate relief right now?
I think that's the initial thought that most consumers have is, they've been trained for those that are heard about it. I'm here to lower my interest rate. When most consumers are really just looking for some payment freedom, some financial flexibility, right? You can't take that interest rate to the grocery store. So a lot of our consumers just coming saying, how can I save some money and free up some resources for my family? Now, of course, there's the other side of it where you have the more savvy borrowers who are just looking to save interest rate. And with the recent rate cuts, we're able to provide that more than we could say, 2023, 22, when the rates were at the all-time highs. They definitely dropped down this last year. And a lot of those consumers bought these car loans when those rates were at those super high interest rates. So now that we're at the ability to lower those down for them, we're seeing those interest rate savings as well as monthly payment savings.
So, Nick, what's the average payment savings for today, and what was it at the height of the market? How has that shifted?
Right now, our 90-day average is just over 5.5% for interest rate. That translates to about 100 and actually $148 was our ending of last month was our monthly savings still. Now, part of that savings does come from some term adjustments and things like that. Right now our average refinance terms come in about 68 months, which again aligns with that national average about 66 to 67 on a used car loan. Right, we're right there at 68 months.
So, Nick, the audience for this podcast, lots of credit unions are subscribed, and in talking to some of the credit unions, there's always this misconception that auto refinance. I mean, credit unions do a lot of indirect auto. We have Navy as a client; they're probably the largest direct auto originator in the credit union space. But is that a misconception that the refinance performance is worse than their indirect auto loan portfolio performance?
No, it kind of goes the opposite, really. When someone goes to a car dealership, they are a lot of time acting on emotion or immediate need. They're going to add a new debt to their credit union, to their credit bureau. They're going to be paying an additional debt they didn't have before. So they're increasing their monthly debt. We have found, and our credit union partners have found, that these refinance loans perform at a much higher level. You may have a 640 performing closer to a 700 because this is a debt the consumer has already, one, proven they can pay. And all
Mhm.
we're doing is lowering that monthly obligation for them. And two, they're committed to staying in that vehicle, right? There's more borrower hanging onto their cars for longer periods now than they have in a long, long time. So we don't have to worry about them necessarily flipping that car as often they would have a few years ago. So
Right.
they're more likely to have that borrower stay in that loan, maintain their membership, and pay a payment that they're already used to paying.
Yeah, we've talked about the relationship between LTV and the infamous back end. Can you A, define the back end for those folks that aren't familiar with it, and B, talk a little about, Eric talked about this during his podcast about LTV ratios and how they've come down. But let's start off with the basics. The back end, what is that to you in your business? I'm familiar from the dealer side.
It's pretty much the same thing. The back end is going to be the products and the protections that we sell the consumer. A back end product is generally going to be a cancelable product. So a consumer pays off the loan or a case of a total loss or a default, whatever that may be. Those products are collected and they're canceled, and that money is returned back to the borrower or the credit union.
And how does the LTV affect the back end? Right now, LTVs have come down, right? And we were talking to Eric. He said, back 2 years ago was as high as 140. Now it's come down to about 120. Are you seeing the same shift in LTVs? And then also, how does it affect your approval rates?
Yeah, definitely seen them tighten up a little bit. Um, Most of those tightening LTVs are going to be on the front end LTVs. Most of those credit union partners are going to be limiting anywhere from 110 to, there's still a few out there doing 125, 130,
Mhm.
depending on their model again. But that limitation's on the front end. The back end LTV is generally a set number with most of our partners.
Okay.
They're going to tell you you can do X dollars or X percent of whatever that loan balance is going to be. And because it's a cancelable product, that's not necessarily as much of a risk for the credit union because they know if that loan has any troubles, that product can be canceled and they'll get their money back on those products, that prorated refund on that.
And for credit unions that are thinking about going into the auto refinance business, what's your average FICO now as they're thinking about the way they typically lend?
Our personal iLending, our average score is running about a 683 right now. There are definitely some competitors in this industry that run a little higher than that as they
Mhm.
really stick to that prime paper. Whereas we've tried to focus a little more on full spectrum and helping some of those underserved borrowers, which is a great alignment with us and some of our credit union partners as many credit unions like to help the underserved communities. And really that's important to us as well. We like to get to those underbanked folks and really give them some opportunity. They may not have as high of a credit score as always, but that doesn't mean they can't be a great member. So we sometimes go a little deeper in the credit spectrum than others in the industry do.
Makes sense. Makes sense. So our business, like yours, on our education refinance business, very much impacted by the macro, and the biggest factor being interest rates. So, coming out of the end of last year, we were all hoping or expecting, right? Inflation was going to decline, which the last marker said it did. But Fed is not cutting as aggressively. So how does that affected your business, and what changes have you made to offset some of that? I realize there's a limit to what you can do, but this is a very large market when you think about the auto refinance market. So how has the Fed's pace affected your expectation for 2025?
I think we all went into 2024, rewinding a little bit, expecting, I think, the start of the year, everyone was
Right.
predicting 7 rate cuts last year. And obviously that didn't happen. So even approaching 2025, we did our internal budgeting and our internal modeling. We didn't take the aggressive side of saying, hey, all these rate cuts are going to come this year. So we planned a little more conservatively, which is great for us now that obviously the markets have changed and maybe we see another rate cut this year. Maybe we don't. Um, Obviously, if the rates cut again, that'll help build up the more and more business. However, even if the rates hold steady, we built our model so that all the borrowers who finance at those peak loan rates in 22, 23, like we discussed, are still going to be seeking options to refinance their cars or credit improves. We can still save them money. We have worked on expanding our model to integrate additional verticals, additional ways to save borrowers money as well. Historically, we've locked on to just the auto refinance. But when we have that borrower coming to us, they're coming to save money. What other ways can we work with those borrowers, with our credit union partners, to make a member more sticky with additional verticals, additional lines, and really just help the credit union profile as well as the consumer overall financial picture?
So what are the verticals are you looking at? Are you helping them refinance their mortgages with your credit union partners, or am I misunderstanding the verticals?
We haven't really gotten to the mortgages, but we have a lot of credit union partners that we work with who are looking to expand maybe personal loans or maybe offer credit cards to those borrowers. So as opposed to just giving them an auto loan approval, hey, while we're doing the auto loan, let's offer them one of the ABC credit unions credit cards that they have a program going. Or maybe they've got some existing credit card debt that comes up during the underwriting process, and the credit union offers them a consolidation of some credit card loans.
So how do you see these credit union partnerships evolving for auto refinancing? Because some credit unions that we talk to, they basically just offer a flat fee. They call it member recapture, right? They tell any member, hey, if you refinance your auto loan with us because the member walked in, like you said, it's an emotional purchase. They went into a dealership, they purchased a vehicle, the dealer obtained financing from them from a bank, perhaps. And now the credit union basically says, hey, if you refinance with us, we'll give you a flat fee, whatever it is. But how do you see credit unions evolving into this auto refinancing space?
I don't think that as we expand our side of the auto refinancing space, I don't see it impacting the credit unions in a negative way, right? We're not looking to capture the business that they already receive. We're looking to be additive to that.
Right.
We're getting into markets and in front of those consumers that they wouldn't normally see. Again, we do have large marketing campaigns, and we can bring them borrowers that maybe live in a different state or maybe a different segment group that they didn't know existed before. So we'll bring them that. In terms of how more and more get involved, I think there's a lot of credit unions that pulled back a few years ago with the instability in the auto market. And over the last few months, I'm picking up calls daily almost now with credit unions saying, how do I get back in the business? How do I expand my program? How do I get more? Um, and so, really, for those that are looking to grow, this is a great opportunity to do it. And for those that are looking to build in their community, if you can find a way to make a little more exclusive, unique product, if for the folks in your community, and you can capture that member for a day-to-day banking opportunity, I think that's a great opportunity for credit unions to grow in this market.
No, makes a lot of sense. And then how do you position yourself? If a credit union says, "Hey, I'd rather do this myself," is it go ahead and do it and it's additive and it doesn't need to be excluding the work that you do today so they can keep doing the member recapture and you're bringing them new members? And then second part, we're trying to do this, but at any point in time, do you see your tech enabling you to recognize this person's a member and bring them back to that credit union if they happen to be on your platform?
That's it. We're doing that today. So anyone's currently on our platform, and we notice that they are. Well, let me rewind. If we notice they have an open trade line, that we're not
Right.
necessarily going to be able to recognize if they're a member without an open trade line. But if we see an open trade line on their bureau with the credit union, that's actually our go-to first. We're not a shotgun approach like
Mhm.
others in this industry are. Some of the folks in this industry just take an application and they send it out to everybody to see who gets the best loan back. We don't like doing that. That's a waste of our resources, a waste of our credit union partners' resources. So we like to, if they already have that member, they've already earned that member and they deserve to have that member back. So we'll bring that back to them and handle the transaction for them, and no one else even gets to look at it.
Now, we've spoken in the past and I've seen the operation. Retitling is a big deal. And we hear various opinions about who does it best. Um, Talk about that process. Where does it come into play in your business? And then what's differentiating about what you do to make sure that you're retitling the vehicle accurately?
Yeah, well, like I said, we've been around for a long time. We've been around for 19 years now. And there are players in the street don't place this emphasis on titling. But like I said, we've been around a long time. There's no auto loan without a title. We've always internally maintained our own titles team, where some folks outsource it, we keep
Hmm.
it internally. This allows us to monitor the process closely and ensure titles are always delivered accurately on time. Um, we're set up internally to process in all 50 states with DMVs. And since we have been along for so long, we've got long-standing relationships with many, many, many of the local DMVs and state agencies. And we're in a position where we can navigate them both digitally and physically if that's needed. And because of our strong track record, that lenders actually turn to us to, hey, can you help us complete our internal loans that we originated? Our internal titling, we're not having much luck at this. Can you help us do this? Which is certainly a service we offer some of our credit union partners.
No, I can't get off this podcast without talking about AI. So, how are you leveraging AI today in the operation? And then where do you see it going forward in your business and helping you become more efficient or changing the customer experience?
Yeah, the AI piece is really something we dove into the last couple of years. When markets slowed down a little bit, it gave us a lot of opportunity to dive into our efficiencies and dive into our processes. We knew the business was going to come back, so we wanted to be ready for it. In that, we've integrated some AI versus to the front of the sale with some customer communications, whether that's some digital experience for the consumer, AI bots, text messaging. We've got all those different type of pieces put together. When it comes internally, we've taken AI for verifications. We can now verify with just something as easy as a plate number. We can take it all the way down to identifying a borrower and any other vehicles they may have in their home. We can use it to verify income. We can use it to verify any of their loan stipulations, their insurances, their proof of income, their driver's license, all of that. So it's really just making the process more efficient. As we move forward, we're looking to use it to, again, use those efficiencies we've created and the ability to double our volume that we're looking to do without having to worry about doubling the volume of employees to do it.
Right, because the process you follow today is the process of selling the back end product really requires a consultant, a loan consultant, to get on the phone with the consumer and talk through the benefits of the product and make sure they're getting to the right product for them. And that's also highly regulated. Can you talk a little bit about that piece of it? Because clearly credit unions listening to this would be interested to understand how does the consumer get introduced to those products, and then how do you make certain that they're done the right way?
Sure. So to start with, the consumer has a digital experience. We kind of call it our choose your own adventure path, right? Some consumers really want to do things online and they just want to be as hands off as possible. And we give them the opportunity. Hey, you can select the products if you want. Here's some videos. Here's some details, some flyers to tell you what the product covers. If you want, you can click here. We can give you more details, and we'll connect them with one of our loan consultants. If they know what they want and they select it, great. On the phone sale, one thing we do is we're very, very diligent on our compliance piece of it. Like you said, there's so much regulation on product sales right now. And that regulatory compliance has always been a top priority in iLending. We take a proactive approach with it to ensure some full transparency and ethical sales practices for all of our product suites. All of our products are presented as optional, number one, right? A borrower can never be led to believe that this is required for the loan. That is, first and foremost, every product is always optional. Borrowers have to be fully aware that purchasing is not a condition of loan approval. And they have to be beneficial as well, right? We don't want to put anybody in a product that doesn't make sense to them. If someone has equity, 50% equity in their car, they're not necessarily need for a 150% coverage gap program. So we want to make sure we align them to the products that make sense to them. So we've kind of taken an over disclosure approach with all our products in breaking down the total cost, both monthly and full term. There are some folks in this industry that Solution car lingo, pack the payment. They just simply say, hey, Vince, great news. Your new payment is X. And in that, they've already added in all the products. And this is included. Well, it's not really included. The consumer is paying for that. They need to know that they're paying for that. They need to know the cost. So we always break it out a monthly as well as a total contract price. We cover it in the presentation. We itemize it on the contracts. We have individual contracts for every product. And we actually have another form that we've created that a borrower has to opt in or opt out of every product just to make sure they completely understand what they're purchasing. And then on the back side of that, as important as it is to sell these products properly, it's important to make sure we're canceling them properly with all the CFPB regulations, all uh, the regulatory agencies looking at cancellation practices now. We work directly with all of our lending partners to monitor those cancellations and track it when the borrower pays off, they sell, they trade in their vehicle. If they don't need that gap coverage anymore, we're going to proactively facilitate that cancellation and ensure that the eligible refunds are processed within that state mandating timeframe.
Nick, I'm curious, what happens when the consumer turns around and walks into a dealership? They just refinance with XYZ Credit Union. They in the dealership, they trade the vehicle in. How does that process work its way to you or the credit union to do these cancellations?
Um, Depends on the product. Again, the gap would get
Mhm.
notified of the credit union because they would know that loan is paid in full.
Got it.
The
That's the
VSC,
trigger.
correct. Yeah. They'll let us know that, hey, that loan paid off. Take care of this cancellation for us. And we'll jump right on that. On the VSC side, there's really not as much monitoring on that unless we're notified by the consumer who purchased it, saying, hey, we got that done. Again, if someone is to cancel and they let us know this loan paid off, we know in that case. But
Mhm.
if they bought a VSC and didn't have a gap and we have no idea they traded in that vehicle or no idea if they canceled that, we wouldn't know about the trade for the refund of a vehicle service contract unless they had reached out to us.
So there are limits, right, to what the consumer needs to understand what they have to do, right, to make sure these are
Correct.
canceled properly. Makes
Yeah, the
sense.
gap we're always going to be on, but if it's a standalone product, we definitely need the consumer help to let us know.
Got it. So Nick, great conversation. So before we close, as you look at 2025, interesting developments in lending that our audience should know about, or your view of the industry that you're really excited about that you want to share?
Oh, 2025, we're hoping things come around. Like we mentioned, if there's rate cuts, that's obviously looking forward to it. If there's not, we still got a good opportunity with the folks who are in the market. It's going to be interesting to see what happens with these vehicle values this year, with all these new tariffs coming into play. Um, all these lease vehicles that are not going to be coming to the market now. There's going to be some supply constraints again that could keep the vehicle balances or vehicle that could keep the vehicle values a little more balanced out and hopefully increase a little bit, making some affordability issues with lenders as the loan amounts keeps going up. So we really hope that's going to open up the refinance market for consumers as the LTVs come back in line. As competition heats up, of course, there's going to be more and more credit unions offering aggressive rates and refinance programs. Um, so it's just going to be an interesting year for 2025. We definitely, with all of our credit union partners and internally, we expect a definite return to the auto refinance market and great profit revenue opportunity for everybody involved.
No, it's great. Yeah, interesting is true, and I think it's keeping us all on our toes as we try to figure out what's going to happen next. So that's a wrap for this episode of 22 Minutes in Lending. A big thank you to Nick for joining us today and sharing his insights. Don't forget to subscribe or leave a review and share this episode with your network, and we'll see you back here on our next 22 Minutes in Lending. Nick, thank you so much.
Thanks, Vince.
Thank you for listening to the 22 Minutes in Lending podcast. We hope you enjoyed today's episode. You'll find links to any resources mentioned in the show notes. If you're enjoying our show, be sure to subscribe and leave us a 5-star review.